Welcome back to the channel. In today's video, we're taking a look at some updates here across the market. I've also got a thread of the week for you at the end of this one. You're going to want to stick around for the alpha, but we're going to have a little look at a few sectors that I've got my eye on as developments have been happening. If you're new here, make sure you subscribe to the channel. Drop me a comment down below, guys, and let's pump this damn algo. So we're starting off with a BTC update here. As you can see, it's around $23,400, a rejection from the range highs 24,200 last night. And since then, it started to roll over a little bit here, back to the range midpoint. Now, interestingly enough, from Crown's TA, he said on the 5-day stochastic momentum, we are now kind of topping for this move. So he kind of expects, unless we get a push off the back of today's major data update, which is non-farm payrolls in the US, if we don't get a stab higher at that point, well, then we're looking to potentially roll over here in the next maybe 5 to 10 days. This would see Bitcoin move maybe down towards the 21K region down here. Non-farm payrolls, these are a market mover, and this is essentially the amount of employment or unemployment in the US. So the question is, how many jobs were added over the last 30 days in America? 193,000 is the actual prediction today. So TED Talks Macro posted this last night. Non-farm payroll data is due on Friday. We'll likely get an opportunity to bid 20 to 22K BTC if the data is hot, i.e. a lot of jobs get added, more than 193,000. But if below expectations, he expects no pullback and a test of 28K. So the expectation, 193,000 jobs added and unemployment around 3.6%. So this is the market mover for today for crypto and for stocks. Of course, last night as well, some earnings came out. Google, Apple, Amazon, all slightly missing their earnings. In the after hours sessions, they did dip down, but then kind of recovered most of their losses as well. So generally, it does seem that the dips are being bought up here. Now, one thing I wanted to cover as well, because I saw a really interesting thread of analysis on this. I'm not sure how many fans of Gann we have out there. W.D. Gann was a famous chartist, I think in the early 1900s, and he has this kind of 50% rule. So if we actually go back to the previous cycle, we can actually map it out here, that from peak to bottom, the duration it takes you to do that, typically you will retrace half of that move back up in half of the time. So previous cycle 2017, top to bottom 364 days. The top was around 19,000, 20,000 bucks. So on that theory, in 180 days from that bottom, we should get back up to $10,000 or just under. If you take the bottom and go up around 180 days, around here somewhere, we actually got around 9,000 bucks there. So this is a potentially interesting observation, especially when you look at the market from this time round. And we have actually retraced from top to bottom here, around 364 days, very similar in terms of time there. Call it around 65,000 bucks as the top over a 180-day period. That takes us to around a 32K region, somewhere around there, which is actually the candle from the kind of 3 arrows Celsius collapse back there, 180 days out. That actually puts us at the start of May for recovering 50% of the drawdown. Interesting stuff, just an observation. But it would be rather funny if this does line up again for another cycle. These were some of the big liquidation points in the market yesterday. And as you can see, this was when Bitcoin was just around 24,000 bucks. At the top, the blue, the darker the blue, the more shorts levered up are there for the taking liquidity wise. And then when we have these dark reds, these ambers and stuff, this is where individuals are 25x long, 50x long, and even 100x long on BTC. And generally what you can see is these gaps between these dark colors here and here, which is kind of the trading range we've been in between. So overnight, Bitcoin has come and taken out a load of these dark areas. We're currently around 23,300, somewhere probably around here. It would have soaked up a load of liquidity in this area, but there's big pockets still here, which would just be under 23,000, maybe 22.8. But on the flip side as well, there's liquidity up here on the shorts. So for example, if the employment data comes out favorable to the bulls, you could see this liquidity start to be tapped into. And onto the downside, employment data comes in too hot. There's obviously liquidity down here as well, but it is within the ranges we've been looking at. But very interesting observations to make in terms of where we could end up off the back of a major news release. Starting here with Illuvium, I want to talk a little bit about games briefly. So ILV, the token here, has hit 3 figures for the first time in quite a while. It's been ramping right up here, especially over the last 7 days. So what's been happening here is that the Illuvium game is now in this alpha release called Illuvium Zero. So landholders have been able to participate in the game and their socials have been ramping up around this. So back towards the end of 2021, we had the gaming run, but no real games existed. Illuvium wanted to try and push this out towards the back end of 2021, which was obviously a bit too hopeful for them. But as you can see, the pieces are coming together and these games are starting to look like they may be released rather soon. So this alpha release open to the landholders began around the start of January, last 6 to 8 weeks. And it allows players to build and manage bases whilst extracting resources, like a resource builder game here. And the first alpha is a bug fixing and adjustment phase. At the end of this, all the data will be wiped, but it says players will be able to make permanent progress by playing in this alpha event. The floor prices on a load of these land items as a result of this went up quite a bit, and as you can see from the token price as well, it's really started to get up here, and they've started to release more and more clips from the game and some of the updates they've got coming, which have been pretty cool to see. This is one of the animals called a kuka inside the game, and if you just listen to the audio behind this, it sounds pretty damn cool. So that's kind of given me like these Jurassic Park based vibes. I'm actually looking forward to this coming out. Mainly for the fact we want the gaming industry to have a real banger. If we can have an absolute banger of a game, we will bring in more individuals into the crypto space than currently there are in total. And this could be one of those games that does that. So the release of this coming hopefully within the next couple months or even sooner, we don't really know. But they're getting towards the end of that alpha test. They'll obviously have to make some improvements on that. But once this does go live, this could be one of the catalysts for the gaming run. We've also got the likes of Imposters from Elio, which is very close to a release as well. They are also testing right now, and they've got a load of influencers clipping out content here. It's a social deduction game. It's the fact you can get influencers like this playing the game, easily clipping their content. It's also social. There's like chat screens. You've got everyone on their headphones, mic'd up, chatting to each other. This means that this type of content can go viral. You can post this on Twitter, you can post this on Instagram, you can post it on TikTok, all those different things. So a different game style to the likes of Illuvium, but yet another one that is coming to market. Gaming coins, of course, with the rest of the market have been getting marked up recently, but when we do have big releases, I do think we're going to see some real fireworks in there if we can continue in this bullish posturing. It's definitely a sector to have on the radar. Then my favorite LSD, RocketPool, here with a bit of an update. This one's actually looking like it wants to break out. Over the last few days, it has kind of flipped $40 from a resistance into a support, and it kind of has blue skies ahead in my opinion. So even if Bitcoin here can just consolidate, not really break down, I think a lot of the altcoins can really get some room to run. RocketPool's update here comes from their forum with a community vote as to whether they should self-limit RocketPool's growth. So this is quite an interesting one you would not see from the likes of Lido, which is very dominant in the marketplace. These guys are saying, look, we don't want to become a central point of failure. We don't want to have all the ETH staked with us. And when you look at the figures, you're thinking, what the heck are they on about? RocketPool isn't anywhere close to being a single point of failure currently. It's only got 1.66% of ETH staked deposits, well below Lido, which has 29%. So are they getting a bit ahead of themselves, or do they just know with a lot of confidence many individuals will be staking with RocketPool down the line here? Partnership with Trust Wallet. If you want to stake your ETH via Trust Wallet, you'd be doing it with a RocketPool node. Partnerships with Coinbase to decentralize their staking. This is kind of big stuff. So maybe they're just trying to get this in place early and avoid any mistakes down the line around centralization issues. This is obviously good. These guys really do believe in the ethos of ETH and decentralization. So one of the individuals with a proposal here typed in, despite our best attempts to be decentralized and secure, we know that like any entity, there will always be attack surfaces. The only thing we can do to ensure the safety of the Ethereum network is to avoid being a single point of failure by limiting our size. So the proposal is to actually limit their size to around 22% of total ETH staked. So it seems they want to do this self-limiting to actually benefit ETH in the long run and by extension RocketPool thereafter. So they're obviously bullish on their ability to take in a lot of staked ether here, but they do want to have this cap in place for the health of the overall network. Current stats, they have around 380,000 ETH staked with them, around $600 million worth, but this is expected to ramp up significantly once LEB8 goes live. There'll be a great expansion of the number of nodes, and also with the Shanghai upgrade as well. You're going to see this 14% of ETH staked come and match the likes of maybe AVAX, Sol, etc. in the 60-odd% region. So this is the setup for RocketPool right now. It came and tagged this kind of $41 resistance from back here and is flipping it as support right about now. If it can sustain this, it has, as I say, quite blue skies ahead. And if you look at the volume profile as well, there's hardly been any trade in this kind of pocket here. So there's no real overhead resistance either. So I am bullish on this one making a real ascent. Another one in this LSD narrative that is looking pretty sweet here is Frax. It's trading really, really cleanly. This one again has come and consolidated around 10 to 11 bucks here. If it breaks above 11, we've pretty much got clear skies here. You can see from the volume profile, not much traded until we get around this area, which is around 16, 17 bucks, which from say $10.50, you're looking at a good percentage move there, around 50%. So those are the immediate things on my mind right now, but this is the tweet thread of the week with Ansem, the Black Noise 06 account, which was deleted by Twitter, but he's now got it back. This guy is a real source of alpha. I would check him out. Does post a lot about basketball and stuff, but in between that, you get these real alpha threads. So Benjamin Carroll posted this, the Jerome Powell statement saying, "We can now say for the first time that disinflationary process has started." Ansem replies, "Bears are dead." So someone asks him, what does this mean in layman terms? How am I supposed to enter the market here? Is it a good time to buy or not? There's very conflicting opinions right now. So Ansem replies as such, "Best opportunities are when there is a mixed consensus on direction. So when you're seeing mixed reviews, there's a good argument for both, but I'm bullish at this moment. From a technical perspective, market has been ranging at the same prices for around 8 months at this point. We had the FTX blow up, which was a ton of forced selling and capitulation by multiple parties. Still wasn't able to force the price to new lows, however, meaning that a ton of cash buyers actually stepped in to absorb that selling pressure. Once that happened, I expected price to reverse in the other direction. And in the past few weeks, we've seen some breakouts of those price ranges, typically a start of a new trend. Bitcoin and ETH are still technically ranging. Watch 25K for BTC and 2K resistance for Ethereum on both of those, and a similar chart on the stock market. From a fundamental perspective, the market's de-risked mostly due to the Fed's response to inflation back in 2021, with the rate hikes being priced in pretty quickly. And a ton of rate hikes quickly also meant people de-risked quicker. Higher rates equals tougher conditions financially, and a lot of people were over-levered. They got blown out. In the last 6 months or so, we've seen inflation come down steadily month over month, but still not at the 2% target rate, but significant progress has been made, and the Fed has hinted that they plan to slow down the pace of rate hikes as inflation situation continues to improve. The Fed knows they don't want to crash the economy more than they have to, as it is already slowing. And I said bears are dead because they, i.e. Jerome Powell and the Fed, are now directly acknowledging that disinflation is underway. And as far as buying, you typically want to buy during recessions because markets are forward-looking and markets eventually recover. So I hope you took something positive from that, as I have done from that thread. It does provide quite a few answers as to the uptick in price action here and why people are starting to risk on more, with markets being more forward-looking than most of the general public expect. So have a great weekend out there, folks, and I will see you again very soon. If you enjoyed this one, slap all the buttons down below, drop me a comment, and I'll see you again. Peace.